Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mark-eitel.
All right, my name is Mark-eitel, and you're listening to the Mr. Mortgage Show, and you are in the right place if you want the data and the info that you need to make better real estate and mortgage decisions for you and your family. And let's face it, there are lots of questions flying around out there right now about real estate and mortgages. Is it still a good time to buy? Should I sell? Should I rent? Should I sell everything I own and live in a tent? There are questions around all sides of this, and we're here to answer them for you. We do this each week right here, same time, same station. We're super happy to be with you, and let's jump right in. Hey, before we get started, let me throw out the Anytime hotline. If you have questions, you can call or text them to 855-462-7292. That's 855-462-7292. We went toll-free, folks, because we are now on several stations and have listeners in multiple area codes. So I'm excited for that. We should get some more interesting questions in. But 855-462-7292 is how you get your questions on the air. If you're shy and you don't want to talk to Jennifer, you can text to that number or go to the website, mr.mortgage. That's www.mr.mortgage. Never a .com, just type mr.mortgage. And on the top right-hand corner of the website, there's a contact us box. Submit your questions there and she'll get your questions on the air. So, with all of that being said, I wanted to share a couple wins this week. Over the course of the last 18 months, we've been hearing all kinds of reports back from the field, if you will, agents telling us that FHA and VA offers are not being accepted. Sellers just don't want to look at them. And I had an interesting situation this week where a wonderful, wonderful couple, pre-approved, rock solid jobs, great credit, they have to go FHA. And they found a house that they loved in Port St. Lucie in the south. I'm doing this in my head, in the southeast quadrant there. And the listing said cash or conventional. So I got a phone call asking if we could rework the approval to go conventional. And sadly, we can't. And I guess not sadly, FHA is a great loan program. So they were going to take a pass on the property. And I don't know what got into me, but I just jumped on the phone and called the listing agent and said, hey, would you be open to an FHA offer? I have a wonderfully qualified, pre-approved couple, and they're working with an agent. Can I have the agent call you, and would you be willing to accept that offer? And she was more than happy to accept the FHA offer and didn't realize that she had listed it as only cash or conventional. So the moral to that story is, folks, do not be afraid to ask. It was a simple phone call, and the long story short, they're under contract and we're off and running. So FHA and VA offers are being accepted. They should have always been accepted. They should have never been frowned upon. But I just share that because you hear me harp about it all the time, that they're quality buyers in a wonderful loan program. And this was an instance where they weren't even going to attempt to see the property, but we just made a quick phone call and found out that, yes, they were more than willing to accept the offer, and boom, they're under contract. And, in about 3 weeks, they'll be homeowners. So super excited to share that story with you. And we had another circumstance with a VA buyer. He's going to close next week, where the seller is giving the full 4% contribution, and he's bringing nearly zero to the table because the VA loan is 100%, and then the seller is giving him the contribution. So I haven't seen the final math on it, but that's a home run for him, and great interest rates with that VA program. So I'm saying all that just to encourage you that the tide definitely has shifted. The market is much more an even playing field. I think it's still stacked to the seller side right now because of inventory, but I do think sellers are more willing to negotiate and to work with buyers than we've seen in the last, 18 or 20 months. So super exciting. Just wanted to share those wins with you because I want to encourage you, if you are an FHA or VA buyer, now may be a fantastic time to poke your head back out there and start taking swings again, because we are seeing offers being accepted. As a matter of fact, I think we've got 3 FHA, VA closings this week. So I share all that because I think, again, that the tide has changed and it's a good time to be out there making offers. I think you have less competition and more inventory to choose from, and sellers' willingness to participate again is super, super encouraging. So take that for what it's worth, but I just wanted to share those wins. But hey, listen, we had a big data report yesterday. We had the consumer pricing index come in at 8.5% increase. So to me, that was a giant number. Now, I get it, not as big as the 9.1% of last month. And the market responded accordingly. They thought it was favorable because it was a smaller number. But I have a tendency to dig past the headlines and start sniffing around the data. And I looked closely, and sadly, only gasoline was really the only category that was easing. There was a lot of inflationary pressure on food, on housing, and I think inflation remains high, albeit not as high as last month, but certainly something still to watch. And I've got a win I want to share around a reverse mortgage. Maybe I'll save it for later in the show, but I've got a client who just they can't keep up anymore on this fixed income with all the inflationary pressures that they're experiencing, and they're turning to the equity in their home as an opportunity to live out the remainder of their life comfortably. And they were really hung up on what their children's reaction was going to be, because, you're using your equity now, and that's less equity to pass on to your children when you die. And with a very quick conversation with there are three sons. Well, that reminds me of the TV show, My Three Sons. But there are three sons, and he had a conversation with the three boys, and they're happy. They don't want any of the equity. They want their parents to be comfortable, which is often the case. I find that often to be the case. And it's many times the resistance point to start the conversation is, you want to maximize your equity position that you leave to your children. But I might share that story sometime during the show because it's quite a happy one. And it's life-changing for him because he was really boxed into a corner and had done all he could for as long as he could, and he's simply running out of money. So that's one benefit to where we are with the appreciation cycle. If you're a buyer, man, it was hard. If you were a seller, yeah, you cashed out, you hit home runs, you were happy. But if you are a senior living on a fixed income, that equity position that you have has never been higher. And a lot of people are capitalizing on the reverse mortgage strategy to live out their remaining life comfortably and in place, because let's face it, we've never lived as long and we've never been as healthy. So people are really holding off until the last minute on that assisted living facility, and they're choosing to age in place, and the reverse mortgage gives them that option. And let me say this, the reverse mortgage is not for everybody. That's for sure. I find in my practice, when we counsel people, more times than not, it doesn't make sense for them. But when it does make sense, it's life-changing. And I've got some thank you cards to prove it. It's always heartwarming when I might dive into it later in the show, but it's a product of the market that we're in, and it's an opportunity that may be worth exploring if you find yourself in that circumstance. But anyway, as always, the show is designed to answer your questions. So I'm going to encourage you to call or text your questions to 855-462-7292. That's 855-462-7292. That is the Anytime hotline. Or you can go to the website, www.mr.mortgage. That's www.mr.mortgage, never a .com. Hit the Contact Us link and then type your question in. We'll get it that way also. And lastly, if any of this resonates with you and you enjoy the show and you want to listen to the replays or you want to listen to the podcast, check out MrMortgageRadio.com. That's MrMortgageRadio.com. There's a ton of good stuff there. And and I encourage you to check it out if you're so inclined. So anyway, you hear the music coming up behind me. That means we're going to run into a short break. We're going to be back in 2 very short minutes to dive deep into the data and take your questions. Thanks.
Hey, it's Mark-Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you heard the announcer. Give us a call, shoot us a text to 855-462-7292. And today I am joined by my lovely producer, Jennifer. She will get your questions on the air. She is manning the she's womanning the hotline, and she'll get your questions on the air. And we're going to jump right into your questions. So let me throw it over to Jen and see what we have teed up as far as questions are concerned. Hey, Jennifer, what do we have?
Kelvin called in asking this question. How long can I lock a rate in for? Is it possible to lock before I find a house? That's a great question, Kelvin.
All right, Calvin, that is a great question. So typically you're going to lock a rate for 30 days or 60 days, depending on the amount of time you need to close your contract. But in this case, you're talking about lock and shop, where you lock your interest rate now and then go out there and find a property. So typically there's an upfront lock fee associated with that, and you can lock 90 days out to a year in some cases. Most of the time it's around 120 days. And the reason there's a fee is you have to think about it like layaway. You're going to take that bicycle off the rack or that stereo system off the shelf and ask the clerk to put it in the back of the store, and you make a deposit on it, and then you pay for it later at some later time. If you never pick it up, you forfeit that deposit, because in all fairness, they could have sold that electronic device or that bicycle, several times. That floor space could have, that product could have generated profit for them. Well, it's no different with money. If you're locking out for, 120, 180 days, 90 days, they're essentially reserving that money for you at today's interest rate. And if rates go up, for lack of a better word, losing money on that transaction. And that's why you're reserving that, because if you never execute your lock and close that transaction, that money was never put into circulation for them. And they might have been able to, in the case of 180 days, they might have been able to lend that money twice. So you pay for that privilege up front, non-refundable lock fee. But in the case of a normal situation where you're But in the circumstance that you've already identified the property, you can typically lock 60 days, sometimes 90 days with no fee. So hopefully that helps. But that's a great question. And, a lot of people in an increasing interest rate environment want to take advantage of that lock and shop, or at very least lock as early in the process as possible. So, hey, Calvin, thanks for that question. Jennifer, what else do we have?
Abby sent this question in. We're looking at a duplex as an investment property. Can you explain the landlord loan you talk about all the time? Another great question, Abby.
Hey, Abby, the landlord loan would be great for a duplex, but I have a question for you. Are you buying the duplex straight up as an investment property, or are you considering living in one unit and renting the other? Because there's two very, very different loan strategies based on your answer. But firstly, let me start with the landlord loan. The landlord loan is pretty simple. We're going to verify your assets. We're going to review your credit. And then if the income generated from, in this case, the duplex, covers the mortgage payment, including the principal, interest, taxes, and insurance, if the income from the duplex will cover that, boom, you're a landlord. That's considered cash flow positive, and it meets the criteria. In some instances, it can even be negative cash flow, but a good rule of thumb is a 1-to-1 ratio. Obviously, you want positive cash flow or you're not going to be buying it, but there are a lot of people who go and buy properties and then renovate them, increase the rents, and they might start at a 1-to-1 ratio or a negative ratio. So that's why the program's built that way. So in summary, we're going to look at your assets, we're going to look at your credit, and we're going to look at the income from the property to underwrite you for the landlord loan. In the other instance, if you were going to move into one of the units and rent the other out, in the case of a duplex, or this will actually work for a triplex or a quad, you could move in one and rent the other 3 out. That could be treated as a primary residence purchase. A lot of people don't realize that. If you're going to buy a multi-unit property, 4 units or under, and you're going to move in one and rent the others out, that could be treated as a primary residence, meaning you're going to be required to put less money down and you're going to get the primary residence interest rate. You'll be able to homestead a portion of the property. It's a very interesting strategy to, basically live bill-free if the income's there to support it. We don't see it often, but when we do, it makes a lot of sense. A lot of people just are unaware of that as an option. So if you're going to move into one side and rent the other side out, it's a different conversation. But I hope that answered your question regarding the landlord loan. If you have additional questions or want to dive deeper on it, just give us a shout, 855-462-7292, and we can talk in length off the air. But hopefully you found that helpful. So thanks for your question, Abby. Hey, Jennifer, what else do we have?
Michelle sent us this question. Our credit scores aren't great, but we make decent money. Are there any loans we could be asking about? We're not first-time buyers.
Okay, so credit scores aren't great, but decent money. Okay, so most likely, depending on your credit score, you may, and we didn't talk about your down payment. I'd like to know that. But FHA loans have more liberal underwriting guidelines, meaning a lower credit score, sometimes a higher debt-to-income ratio. And the debt-to-income ratio is simply the amount of your income that is attributed to debt each month. So with an FHA loan, they'll allow a higher percentage of your income to go to debt, and they'll also allow you to have a slightly lower credit score. In some cases, a significantly lower credit score. It's less about the score and more about what, if any, derogatory items are showing on your credit report. For example, you can't have a defaulted student loan and then get an FHA mortgage. So I'd want to know a little bit more about when you say your credit scores aren't great. But I will tell you this, most people's definition of not great is different than ours. I've had a lot of people tell me, my credit is bad, my score is only 680. And I'm thinking, wow, with a 680, we can fund just a whole host of loan programs. So a lot of people judge their credit score more harshly than we do. But I would venture to say that an FHA loan would be worth having a conversation about. And you may even be able to qualify for conventional, depending on, your credit, your actual score, and more importantly, what derogatory credit, if any, is posting. And then obviously your income, because there are some really great, really aggressive conventional programs that require a small down payment. Some of them have income limits, but I would maybe start with an FHA loan. There's a lot more I would need to know to give you really good guidance, but I'm open to the conversation. If you want to call me at 855-462-7292 off the air, we can set up a time to talk. And, maybe when I learn a little bit more, I can give you some better guidance. But let me say this. Oftentimes people think they don't have as many options as they do because, as I mentioned, they have a tendency to judge their credit score more harshly than an underwriter will. So hopefully that helps. But you hear that music rolling up behind me. That means we are going to jump into a short break. We're going to be back in 2 minutes to take more of your questions and debunk some of the real estate and mortgage myths that are floating around out there. But yeah, get your questions to us, 855-462-7292. That's 855-462-7292. That's the Anytime hotline. And Jennifer will get your questions on the air. Sit tight, and we'll be back in 2 very short minutes. Thank you.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is mark-eitel, and you are listening to the Mr. Mortgage Show. And I hope you're enjoying the Mr. Mortgage Show. And hey, while I'm thinking about it, you hear me reference a lot of data each week during the show. And I post all that data to the Facebook page, and you can find us on Facebook at The Mr. Mortgage Show. Just go to Facebook, search The Mr. Mortgage Show. We're going to put all of that in one place to try to make it easy for you. But right now, check out Facebook and search The Mr. Mortgage Show. You'll find all of the data sets, the articles, all of the information that we use each week to answer your questions and then to kind of give you the rundown, if you will, on what's happening real estate and mortgage-wise. So anyway, you heard me say we're going to answer more of your questions. I always love your questions. So I'm going to throw it over to Jen to see what she's up to over there. She's up to no good, folks. I can tell by the smirk on her face. But hey, Jen, do we have any questions?
Brian sent this one in. I run a parasail boat and I get paid on a 1099. I get cash tips too. I don't own the business. Can I use a bank statement program you talk about? Oh, he talks about that all the time, Brian. Great question.
That is a very cool job, my friend. I bet it's fun running the parasail boat. I'm going to jump back mentally to a client from last year who ran a dive charter. Almost identical circumstance in the sense that he didn't own the boat, but he did run the boat. And he got, I'm trying to remember the app that they used, but he got a considerable amount of cash tips at the end of every run. And they paid Zelle. That was it. Zelle. They paid him via Zelle. So the Zelle app electronically recorded all the cash tips, and he was paid via 1099. So those deposits were verifiable, and we used the bank statement loan for him because while all of that cash made it to his checking account, it didn't all make it to his tax return. Hey, maybe that's why they're employing 87,000 new IRS agents with this new bill they just passed. Is that crazy or what? 87,000 sets of eyes to review our tax returns and whack us over the head if we misfiled. And listen, I'm not an advocate for cheating on your taxes by any means, but it's kind of scary when you think about the number of IRS agents that are going to be. But anyway, that's a whole nother topic. Listen, I'm sure Clay and Buck are going to cover that right behind us because those guys do politics way better than I do. But my God, that's a scary idea that we just doubled the IRS. But anyway, back to your story. I didn't mean to get sidetracked there, Brian. So in this instance, we used the Zelle deposits as well as his biweekly deposits into his checking account. And because he didn't have to pay for gas or pay for any of the equipment or any of the slip rental, we were able to use the lion's share of his deposits. And I'm going to guess that's similar with you, unless you actually own the boat and have those expenses associated with it. Now, the reason that's the case, a lot of people are scratching their head right now saying, wait a minute, why does Brian get to use a bunch of his income and I don't? In me, I'm a painting contractor. I don't get to use the same percentage of my deposits. Well, that's the very reason. Your profession requires you to buy materials. So that's the difference. This is a perfect example. Brian has very little out of pocket, if any, expenses in doing his job. And someone who is a painting contractor has to service his equipment and buy materials. So that is probably the best illustration of why a percentage of your deposits are used and not, 100% of your deposits. So, but yeah, Brian, to answer your question, that loan program should work well for you, assuming that you make enough money and have the credit scores required for the program. But anyway, thank you for the question. I hope that helps. So let me throw it over to Jen and see what else she has. Hey, Jennifer, what other questions do we have?
Sandy sent an email. We love emails, Sandy. We need to pay off some debt with a refinance. What is the maximum percentage we can borrow with a cash-out refinance?
That was Sandy. Okay, Sandy. Typically 80%. So you're going to hear a term called tappable equity. And what tappable equity is it's 80% of your property's value minus your current loan amount. So let's use very round numbers and say your property's worth $500,000. So 80% of $500,000 is $400,000. Well, if you have a $250,000 loan on your property, you have $150,000 in tappable equity. So hopefully that answers your question. There are some exceptions to that where you could go higher depending on the loan program, but most of the time you're going to want to stay at that 80%, and most of the loan programs are going to require it. But as I mentioned, there are exceptions to almost every rule. But hey, you mentioned that you want to pay off debt. So if you were to do a debt consolidation refinance, you may find that you get a better interest rate. So Typically, there are three types of refinances when it comes to underwriting. One is a rate and term refinance, and that's simply lowering the interest rate and lowering the payment. You're not taking any cash back, or you're taking a minimal amount. And I mean, $1,000, $1,200, something like that. That's considered a rate and term refi. That refinance has the most favorable interest rates. The second tier is called a debt consolidation refinance. So you're paying off the debt. Now, a lot of times the debt will have to be paid off right at closing. So the title company will, take the new loan proceeds in, and they'll pay off your existing mortgage, they'll pay off your Amex, they'll pay off your truck. It's all done through the title company. They distribute all the money. And the reason that gets a more favorable interest rate, and the reason they do it at the table, is it prevents you from incurring more debt. So the lender's saying, okay, we'll do a debt consolidation loan and we'll pay off all the debt for you. And then we don't count any of that debt against you when we're underwriting you, but we need to make sure it gets paid off. And then lastly is a cash out refinance where, you just, in the example I gave, you would get a check for, $150,000 less whatever closing costs were associated, and you can go do whatever you want with that $150,000. That's a true quote unquote cash out refinance. And those are the three different categories. And you hear me a lot of times talk about the REC refi, the REC, the REC refi. That's a version of the debt consolidation loan. So we're paying the debt off at the closing table. We created the REC refinance to streamline the process and reduce the amount of fees associated with it so you can fully capitalize, so you can benefit from the most amount of cash to pay off the debt. So the cash out refi, the debt consolidation, or as we call it, the REC loan, and then the rate and term refi are the three categories of a refinance, and they're all priced slightly differently because of the risk associated with it from the lender standpoint. So hopefully that answers your question. 80% you'll be safe. If you find you need to go over 80%, give me a call and I'll walk you through it. 855-462-7292 is the anytime hotline, and you can use that during the week when we're not on the air also. But hey, Sandy, thank you for that question. I hope it helps. We're seeing a lot of people right now looking to this because as the Federal Reserve keeps increasing interest rates and is likely to do it again in September, and the cost of everything is so high, people are getting pinched and they have a load of equity that they've never had before. It's the house's money, right? It just kind of poof appeared because the market's been so crazy, and they're looking at it as a viable option to pay down some debt. And in the past, you would look at possibly a home equity line of credit, but that home equity line of credit the interest rate is going to increase every time the Federal Reserve increases the overnight rate. So for that reason, a lot of people are looking at, a 30-year fixed, a 15-year fixed. And hey guys, here's one thing that's pretty neat about the REC refi. We can do it specific to the remainder of your loan. So let's say you're 4 years into a 30-year fixed rate and you've got 26 years left and you want to do a refinance, but you don't want to start over and have another 30 years. We can do a term-specific REC loan and do a 26-year fixed rate mortgage for you. So there's a lot of flexibility in that loan product to make it make sense for you in your specific circumstances. So anyway, I throw that out there only because I don't discuss that part of it often, and it is. But you hear that music rolling up behind me, that means we are going to jump into a short break. We're going to be back in 2 minutes to take more of your questions and debunk some of the real estate and mortgage myths that are floating around out there. But yeah, get your questions to us, 855-462-7292. That's 855-462-7292. That's the anytime hotline. And Jennifer will get your questions on the air. Sit tight and we'll be back in 2 very short minutes. Thank you.
Hey, it's mark-eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the rec loan he advertises. Long story short, we did a rec refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
Hey, it's mark-eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you heard the announcer. If you have questions, call or text your questions to 855-462-7292. That's 855-462-7292. That is the Anytime hotline. And you can use it when we're not on the air. It'll go to my office, 855-462-7292. But right now, while you're in your car or your house or your office and you're listening to us, if you call that number, it's going to ring over to Jennifer, my producer, who is womanning the hotline for me today, and she'll get your questions on the air. So, and if it goes to voicemail, just leave the question on the voicemail, and she'll get it on the air because she's getting harassed with some phone calls today. So sorry, Jen, we've got some rowdy listeners apparently. But anyway, that's how you get your questions on the air. You can also check us out online and submit your questions via the website, which is www.mr.mortgage. That's www.mr.mortgage, never a .com, just mr.mortgage. And yeah, you can get them to us that way too. So, hey, and if you like what you hear and you want more of it, check us out at mrmortgageradio.com. That's mrmortgageradio.com. There you're going to find all of the replays of the radio show as well as some podcast episodes. So each week after the show, we post the recorded version to the podcast page at mrmortgageradio.com. So anyway, that is all of the housekeeping. That's how you find us when we're not on the air. So let's keep the questions rolling, and let me toss it over to Jen and see what she has teed up.
Margot emailed this. I'm helping my daughter buy a townhome. What is the minimum down payment for a first-time buyer? Can we get a better rate if we put more down?
Okay. That's a great question. So the minimum down payment is going to be between 3 and 3.5%, depending on the loan program. The safe bet is 3.5% because that's the FHA program. You can gift your daughter the down payment as well as the closing costs. That's one way to do it. And that requires you not to be on the mortgage. You're just simply the donor providing the down payment and the closing costs to get her into the transaction. And from the standpoint of liability, that's what most parents prefer. And just since we're talking this through, well, let me finish answering your question. So with the FHA loan program, you're not going to necessarily get a better interest rate by putting more money down. But with any loan program, if you put down less than 20%, there's some component of mortgage insurance that's going to be required. Now, the more money you put down, the lower that rate, that insurance, that MI factor, as we call it, the lower that number is. So for just, to throw out round numbers, a 15% down payment would carry a lower mortgage insurance rate than, say, a 3.5% down payment. But the interest rate most likely is not going to change just because you put more money down. So to answer your question, 3.5% if you go FHA, you can gift the entire down payment as well as the closing costs. And that is the preferred method for a lot of parents. Another thing we see a lot of is a non-occupying co-borrower. And we talked a little bit about this last week, if I remember correctly. I think Jen read a question last week from a gentleman who his dad was in New York and dad was going to co-sign the loan, and he's a non-occupying co-borrower. The downside is dad is now equally responsible for all the debt. So if son misses a mortgage payment, dad now has that on his credit report. So if you're looking for, the least amount of liability on your side of the equation, then gifting the down payment and the closing costs may be the way to go. And to answer your question, 3.5% would be the minimum down payment. And then I don't know that you would see a benefit of a larger down payment, with the exception of the MI factor being improved a little bit. And if you're not working with anybody yet and you want me to run those numbers, just give me a call, 855-462-7292, and I can show you what a monthly payment would look like and what an MI factor would look like, a mortgage insurance factor would look like for the varying down payments that you're considering. So, hey, thanks for that question. And that's awesome that you're helping your daughter get started, because we talk about it all the time. You've got to get started so you can benefit from the equity building machine that is called homeownership. And I see it all the time. Somebody's got to get you into the game. And then, after a few years, you're cashing out your equity and moving up. And then after that, you're cashing out and maybe moving up again or making a lateral move, but you have the equity to do it with. This money's not coming out of your pocket. And then later in life, you've got the equity should you need it for a reverse mortgage, or you're going to sell the property and downsize and put, a nice amount of money in the bank and then go buy a property. So, hey, that reminds me, I was talking in the opening segment about a reverse mortgage story, and I'm not going to tell any personal details because I don't want to embarrass anybody, but this just really, really touched my heart because, we all see the handsome retired actor on TV talking about the reverse mortgage, and the reverse mortgage has a bad name, and rightfully so. It was abused in the past. There were a lot of people who cashed out their equity and they made poor choices investment-wise, and they were encouraged to do this, and they lost their money in the form of investments, and then they didn't have any equity. It was all around a bad thing. And then some rule changes were put in place to protect the borrower. And I think that's what that ad campaign with the handsome retired actor is all about, is to let people know that it's not the reverse mortgage of the past. And I've said this before, and this might be a harsh analogy, but I look at it like a gun or like a hammer, I guess. So a hammer could be used to build a house and create something beautiful, or it could also be used to tear the house down. It's just a tool. It depends on in whose hand it is and what their intention is. So the reverse mortgage itself is an amazing loan product for the right person. And in this instance, it was the right person. This was a widow, and she, like many, many people today, have outlived her savings, and she just can't do it anymore. She's literally cutting her medicine, her pills, in half, and she's choosing to go to the grocery every other week because she's trying to stretch that, $1,600 a month Social Security. And which is, by the way, the average U.S. Social Security payment is, I think it's $1,500 a month. And she just couldn't do it anymore. So she was curious about a reverse mortgage. And like a lot of people, she had questions like, does the bank own my home or do I own my home? Well, guys, the bank doesn't own your home. It's yours. The bank has a lien on your home, just like a normal mortgage. The bank doesn't take ownership of it when you die. It goes to your estate or to whoever you pass the property on to. They do have to satisfy the lien just as they would if you had a normal mortgage on your property. There's a lot of misconceptions around it. You're even protected in how you can access your cash, so you can't cash it all out at once and go to Vegas. But anyway, long story short, she closed the transaction with my friends down at Willow, and she cried. She broke down in tears as she signed the papers, tears of joy because she was now going to be able to go grocery shopping again and take full tablets of her medication. Sorry. So I say that only to share that the reverse mortgage is not your grandfather's reverse mortgage anymore. It is an amazing loan product for equity management through your retirement years, and done correctly, it can make a significant improvement in your lifestyle. And this was just one more example of it. And I mean, we proudly offer the product. We're very conservative in how we promote it and how we counsel around it, because it's not the right loan product for everybody. You hear me say it all the time. It's not. But for the right person, it's life-changing. And this woman's story just kind of, illustrated that for me, and I wanted to share that. So, but I do appreciate that question. And I think my point in all of that is you're getting your daughter started into homeownership. And by doing so, you're going to allow her to have all of those choices later in life in how to use her equity. You hear the music coming up behind me. That means we're going to jump into another short break. We're going to be back in 2 minutes to take more of your questions, and you can get those questions to us by calling or texting 855-462-7292. That's 855-462-7292. We'll be right back.
Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark-eitel and the Mr. Mortgage team.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And hey, I just want to say thanks. We've had some great questions. I always enjoy, you guys don't disappoint. I always enjoy your participation. We're going to jump into some more of your questions here in a minute, but I've got a favor to ask. If you're enjoying the show and any of this resonates, please do me a favor and share the show. I'm hoping I can count on you. If you hear somebody talking about buying real estate or selling real estate or refinancing, you think they've got mortgage questions, introduce them to the Mr. Mortgage Show, introduce them to my team. I'll be happy to answer all their questions. We're always trying to expand the listenership. Our goal is to get the information out to as many people as possible. So I appreciate you. If you'll do that for me, I will be very, very thankful. So I appreciate that. But yeah, with that being said, let me throw it over to Jen and see what we have teed up for questions.
Andy sent this text. I listened to your podcast about the seller buying down my rate. Can you explain this idea?
Okay, Andy, that is a good question. Every time I've got a friend, Andy, he's a bass guitarist in my band. Yes, I'm in a band. And I don't sing, but I don't think any of you are surprised by that. I play the drums. But anyway, I always want to say Andy from, what was that show? Andy Griffith, the Andy Griffith Show, Mayberry. But anyway, Andy, I'm sorry. I didn't mean to do that to you, brother. Great question. So a rate buy down works simply by paying a fee up front as part of the closing costs to lower your interest rate. And there's no rule of thumb. I've heard some very smart, well-respected people in the real estate world say a 1% fee will lower your interest rate by 1%. That could not be further from the truth. A 1% fee may lower you a quarter of a point or a third of a point, but it's not a 1-to-1 ratio. So normally to buy down a full point is somewhere between 3 and 4% of the loan amount. So buying a house that's $400,000 and the seller is willing to take, let me do some quick math, $385,000. You're going to get a $15,000 discount. Rather than write the contract for $385,000, it may, I'm not saying it will, but it may make sense to write the contract at $400,000 with a $15,000 seller contribution towards interest rate buy down and closing costs. And what that could do is turn a 5.5% interest rate into a 4.5% interest rate. But it's all going to be predicated on what the interest rate of the day is and what loan program and what lender's guide or rate sheet you're working within, because it's always a little bit different. But that's where a really great real estate agent will make a difference. And I work with a load of real estate agents, and I work with some really good ones. I work with some decent ones, and I work with some pretty bad ones. And I've seen a huge difference in the offer acceptance and the creativity in the contract based on what I would call the negotiating skill level, the attitude, the willingness to dig in of the agent. So a really good real estate agent can make a big difference in that arena. And have your agent and your mortgage guy work together on the best use of that discount so that you can, best apply it. Like in this example, Andy, you could use it for a rate buy down. So I hope that helps. And if any of you are listening and you don't have a really great agent and you want me to introduce you to one, check out reallyGreatAgents.com and I'll help get you in touch with somebody. Like I said, there's a lot of really great agents out there, and there are a lot of not so great agents. And sometimes the agent can make the difference. I say it all the time. You need a really solid team because, hey, who knows what's going to happen along the way? There's always the possibility of some unforeseen issues that pop up and some additional negotiations that need to happen during a transaction. And that's where a rock star agent can get it done for you. So on that note, I'll be happy to introduce you to somebody if you need, if you'd like me to. So check out reallyGreatAgents.com. But anyway, hey, I want to say another thank you. We had some really good questions today. I know Jen was entertained as always. So hey, Jen, as we're winding the show down, how do people get us during the week?
Call toll free anytime on the Anytime hotline, 855-462-7292. Call or text anytime. That's anytime on the Anytime hotline.
That's right, the Anytime hotline. So you guys have a great week. We're going to be back. We will see you next week, same time, same station. Until then, be good. Until then, have a fantastic week. Say goodbye, Jen.
Goodbye, Jen.
All right, you guys, have a great week.
Thanks, everybody. See you next week.
That's a wrap. Join mark-eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.
So you think interest rates have gotten too high to refi? Well, not so fast. There are several reasons people refinance. One is to lower their rate, that's for sure. But there are many, many other reasons. Debt consolidation, unexpected medical bills, home renovation. I even know of one guy who refinanced his house so he could buy his mistress a condo. But let's get back to debt consolidation for a minute. I'm working with a client now. His name is Ben. He's in Palm City. And Ben is going to refinance, pull some cash out, pay off 2 truck payments, as well as a host of credit cards. He's going to use a loan program called the REC refi to reduce, eliminate, and consolidate his debt. So yes, his mortgage interest rate is going to go up a bit, but he's going to reduce his monthly expenses significantly. So if you'd like to learn more, tune in to the Mr. Mortgage Show every week right here on WPSL Thursdays at 11 a.m. That's right, we're just before Clay and Buck. Or check us out online at Mr. Mortgage Radio. That's every Thursday at 11 a.m. right here on WPSL. Or you can find us online at Mr. Mortgage Radio. That's MrMortgageRadio.com.